A little revolution has occurred in the cryptocurrency market, which has evolved from being nothing more than a social and computer engineering experiment over the previous decade to being the most dynamic and, to put it bluntly, volatile market on the planet today. I used to hold some cryptocurrency, but I sold it and withdrew from the market a while back because it was too volatile. Hi, let's talk about, is Bitcoin the new gamble? There are many different economic definitions of the term cryptocurrency. Cryptocurrency have been called a variety of things, the most notable of which is glorified gambling by outlets like Last Week Tonight and other similar critics. Cryptocurrencies have also been called modern stores of value because they are similar to gold or other precious metals. Without currencies, we'd be stuck in a stumbling system where we'd trade 500 cattle for one vehicle in order to get one thing. Cattle farmers sell their cows for cash and then take that cash to a dealership that is happy to trade it for a pickup truck. I really shouldn't go into this much detail for an average of your economic channel, but sometimes this process is something that we take for granted and cash involves. Depending on the currency, you're either shopping for a Ferrari or a Hyundai. This channel has repeatedly driven home the importance of stability and confidence, both of which have declined by 2 points. These are the things that I've hammered home on this channel because they're key components of not just any economy, but also any discussion of currency. The fact that some retailers have started to accept cryptocurrencies does not mean that you will be able to stroll into a grocery store with your Bitcoin wallet and walk out with a cabbage anytime soon. Cryptocurrencies are not accepted by the majority of shops, and they are not recognized by the law either. Consider this. If you attempt to purchase a train ticket in Japan using your Australian dollars, you will be sent to your amusing toilet. In light of the uncertainty surrounding the future value of cryptocurrencies, investors are cautious to put their money into them unless they are satisfied that their profits from them will be consistent over the long term. Every second of every day, you have the capacity to reduce yourself to nearly nothingness. I'm being very generous since I'm aware that certain stores do accept cryptocurrency, so my end of the contract is exceedingly liberal. The desire to use bitcoins and other similar currencies as a means of storing money is a primary driver of the asset class's growth. My opinion is that you have made an excellent case for the similarities between gold and currencies such as the bitcoin, which are both limited in supply, secure to store outside of the traditional bank system, and almost entirely speculation-based investments such as stocks and bonds, which you have made. Both gold and Bitcoin have been demoted to the category of storage value, since they were thought to be too inconvenient to be utilized as a means of exchange. Because of the continued uncertainty surrounding the Brexit discussions and trade disputes, the price of both commodities has increased dramatically in recent months. As a consequence, the values of gold and Bitcoin have grown in tandem as a result of this. He has the potential to pay, but he must demonstrate this ability over a long period of time before others will take him into consideration. The buyer's predicted return on a transaction is deemed to be lower than the amount of money being exchanged when the transaction is judged to be at risk, while Bitcoin, on the other hand, does not fit this condition. Detractors of cryptocurrencies have already expressed their displeasures with this fact. Bitcoin is essentially a zero-sum game in every sense of the word. It was, in fact, the case. It's a game in which the outcome is bad. So, what do you think about all of the folks that are becoming multimillionaires that you see? Okay, 3 key points. Let's take a look at it from a different perspective in a hypothetical situation. Let us assume for the sake of simplicity that everyone will invest $1,000 in Bitcoin, nothing more and nothing less. Assuming that the price of Bitcoins rises to $1,000 per coin, the initial investor decides that he is satisfied with 1000% returns and sales of his 10 Bitcoins to other investors. This is not an unrealistic assumption, and the initial investor decides that he is satisfied with 1000% returns and sales of his 10 Bitcoins to other investors. This sort of dilemma occurs for cryptocurrency since they do not produce any value on their own. Companies such as Amazon or Apple may see comparable exponential rise in their stock's prices since the stock price is not only reliant on who is purchasing what. It's sometimes referred to as a zero-sum market, which indicates that for one individual to earn a profit, someone else must suffer a loss in order for the profit to be realized. In the case of Bitcoin, on the other hand, it is a little less evident since it is not the case that for every Bitcoin billionaire out there, there is an equal number of others. It is more probable that for every 1,000 person, there will be 1,000 people who have lost $1,000 in the stock market. Because the vast majority of individuals who lose this kind of money does not make the headlines and surely do not gloat about it on social media, the quiet majority is relegated to the sidelines of discussion. Corporate cards are classified as negative market cards, which indicates that players may win, but statistically, they are more likely to lose than win while playing the corporate cards. The situation is analogous to that of horse racing or a game of blackjack where you may win and even walk away with a profit, but if you play for an extended period of time, you are very certain to lose money. In recent years, the internet has been flooded with questions about cryptocurrency, and this video is my effort to address some of the most often asked issues. The reality remains that cryptocurrencies are an inherently dangerous investment, and that if you must question someone about the mechanics of a possible investment, you should proceed with caution. For the first hour after the release of the video, I will be available on the Economics Discord server, which is detailed in the video description, to answer any questions you may have or just to talk. Otherwise, I will try my best to respond to all of the serious remarks that have been left in the comments area. So thank you for your time and consideration.